Hello everyone and welcome back to our second video about the candlestick charts. Today exclusively we're going to be talking about the reversal patterns, how to identify them and what do each mean. So we have two different types of reversal pattern. The first one is bullish, the second one is bearish. Bullish means that the market is going up, bearish means that the market is dropping down. Now we have three different types of those patterns. We have a weak signal, a reliable signal, and a strong signal. Now let's start with the weak signal. So as you can see here, this is the chart for the weak signal candlestick pattern reversals. So dragonfly, hammer, hanging man, inverted hammer, and shooting star are a one-day candle pattern. Now what does that mean? You got to remember, when we're looking at a chart, let's see a daily chart. Each candle represents one day. So these patterns represent one day of trading. So a dragonfly, we've seen it in our last video. It usually tells us that the market opened and closed at the same spot, but there was a huge seller power. So what does this mean basically? It's a bullish reversal pattern. So let's say the market is actually dropping down like this. We see this pattern, we see that there's potential for buyers to go in, and which could indicate the market actually going up. Now, let's talk about the hammer and hanging man. Hammer is called a hammer because it represents a hammer. So, for example, this is the head, this is the handle, and it's a bullish sign. So, if you see green here, it means a bullish. If you see red, it means it's bearish. So, it's the same as the dragonfly. The market is dropping down, and we see this pattern. It could indicate that the market is having a reversal and it's going to go back up. Now, a hanging man called a hanging man because it represents a man being hanged. So, let's say the trend is actually going up like this. Okay, so picture this head right here is the head of the man, and this is the wig. Basically, it's the body of the man. This is why it's called a hanging man, and it's a bearish reversal pattern. So the market is going up. We see this pattern. Let's indicate that the market could go down. Now, inverted hammer and shooting star is basically the reversal of hammer and hanging man, but they do the same job. So what does that mean? So let's say the market is going down. We see an inverted hammer. It indicates that the market could go up. A shooting star is basically, they call it shooting star because it looks like a shooting star, like it's a star and they have a tail for it. So the same thing, the market is actually going up. You see a shooting star, then the market it basically indicates that the market is going down. Now, these are the simple one-day reversal pattern. Now, let's move into the more complicated ones. So the first one is called a dark cloud pattern. Okay, so we have an uptrend. Okay, the trend is going up. Then we see a big white candle or green candle. You gotta understand. White means green, black means red. White means bullish, black means bearish. So the market is going up. We have a big white candle, and after that, a big bearish candle. But notice how the bearish candle is actually covering up the white candle. Like, notice here. See, like there's a gap here basically. That would basically mean that it's actually acting like a cloud. It's actually closing, like, let's say this is the light source, it's actually closing the light on this other candle. And it's a bearish reversal pattern. So it usually means like when the market goes up, it indicates that the market is probably going down. Now, the piercing pattern is the opposite of a dark cloud pattern. Notice how the trend is going down and we have a black candle, a bearish candle, then a bullish candle. So it's the opposite. Here we start with a bullish candle, then a bearish candle. Here we start with a bearish candle, then a bullish candle. And it's the same, like it's covering up the candle before. It usually indicates that the market is going back up. Now, the next two basically patterns are called upside gap 3 method and downside gap 3 method. Now, these are 2-day candlestick patterns. Notice we have two candles involved. Here we have three. Okay, so the market is having an uptrend, it's going up. Okay, the first bullish candle, then we have a gap, okay, in the market. So the market opened the next day with a gap. So let's say the market closed at 50, the next day it opened at 60. So there's a gap, a 10 gap. So after that, we have a big bearish candle. That basically means that the market is probably going down. So it's going to be something like this. So you got to remember three different candles, three different candles. So the downside gap is the same thing, but it's the opposite. Notice how we have two bullish candles and one bearish here. Here we have two bearish and one bullish. So the market actually was on a downtrend. It went down, then it went back up. Now, bearish Harami and bullish Harami is the same thing here. They are very weak signals. They usually mean that the trend is actually losing momentum. So notice here how the market is going up, and then we have a big bullish candle, then a small bearish candle that's actually been eaten by the bearish candle. Notice this. We have a big white candle, then a small black candles. And notice how it's actually like all the ranges, like from top to bottom, it's actually inside this. So now, notice if we do this, see what I mean? And we do this. So it's in the range of that. And that's what it's called a Harami pattern. And like I said, so it's an uptrend, big bullish candle, bearish candle, indicates going down. A bullish Harami, it's the opposite basically. The trend is going down. We have a big bearish candle, then a small bullish candle, and it could indicate that the market is going up. Now let's take a look at the reliable candlestick patterns. Oh, sorry about that. Okay, there we go. Now we have bearish engulfing and bullish engulfing. So basically, bearish engulfing starts as we have an uptrend going, a small bullish candle, then a big bearish candle eating the small one. Like notice how we talked in the Harami that the second candle has been eaten by the first. Here's the opposite. So the second candle is bigger than the first one, so it's actually covering it up. This basically means that the market is probably going down. Now, if we look here, the bullish engulfing, it's the same. We have a downtrend. We have a start of a bearish candle, then a bullish candle. Same thing. This market is going up. Now, tower's top and tower bottom. Notice these are 2-day pattern, but here we have actually multiple day patterns. So this could be between 3 to 5 days to actually form this type of pattern. It's called tower top and tower bottom. So in an uptrend, we usually have a big white candle or a bullish candle. Then we have a few spinning tops, then a big bearish candle like this. So spinning top, if you don't know, it's basically the same as a normal candle, but the body of the candle is really small. That's all you gotta know about it. Tower's bottom, we have a downtrend. Notice how we started with a big bearish candle, a few spinning top, then a big bullish candle, then the market goes back up. So notice here how we have 1, 2, 3, 4, 5. So it's a 5-day pattern. But notice here how we have, this is the start, 1, 2, 3, which is basically a 4-day pattern. Now, abandoned baby has two types. He has a bullish type and he has a bearish type. So the non-uptrend, we have, it's a 3-day pattern, remember that? And you can always save this type of picture to remember which pattern you can see on the chart and try to identify it until you get used to it, until you have them memorized in your head. So we have an uptrend going up. We start with a big bullish candle. Then we have a doji. If you remember what a doji is, we talked about it in our last video. Then we have a bearish candle. This pattern called abandoned baby, it usually means a reversal. So if the trend is going up, we see this pattern, and the trend is going down. And the same thing here. The trend is going down. We start with a bearish candle, a doji, then a bullish candle, means that the market is going up. Now, dumpling tops and fry pan bottom. Sorry. So this pattern is a little bit complicated because it's multiple days, just like with the tower top, because it has spinning tops in it. So it could be a 3-day pattern, it could be a 5-day pattern, it could be a 6th, etc. So notice here how we have an uptrend, okay? Then we start with a few spinning tops here. Then we have a gap. You gotta remember the gap, okay? The gap, then a bearish candle. So an uptrend, spinning tops, gap, bearish candle. This basically means that the market is going down. Now, the opposite, what's called the fry pan bottom, basically we have a downtrend, a few spinning tops, we have a gap, then the market actually starts with a bullish candle. It indicates that the market is going up. Okay. Belt hold line and belt hold line has two different types. They have a bearish type and a bullish type. Looks just like abandoned baby, the same name, so it's not confusing. So it's a 1 day pattern. So notice how we have an uptrend, okay? Then we have a single bearish candle, okay, with only wick in the bottom. So what does that mean? It means that the sellers have more powers than the buyers, okay? Because like if we talked about the wick in our last video, the wick basically represents the ranges of the price where it reached in the day, but where it didn't close yet. So notice here is the open, here's the close, like we said in our last video in our candlestick structure. And we notice a wick here. It represents that sellers has more powers, which could indicate that the market is actually having a reversal. A belt hold line bullish is the opposite. So notice we have a downtrend, then we have a bearish candle with an upper wick, which basically represents that the buyer has more power than the seller and a reversal could be happening. Now, the last one in the reliable pattern is called the tweezer's top and tweezer's bottom. Okay, so it basically means we have an uptrend. Okay, and notice how the first and second candles are actually at the same place, like the wicks actually reach the same place. This could indicate a reversal in different types of situation. For example, we have an uptrend, we have a bullish candle, and what do we have here? Okay, an uptrend, we have a shooting star here, for example, from our week patterns. So notice how they ended at the same place. This could indicate that the market is dropping down. Same here. The markets is dropping down. They're ending at the same place. We have a hammer here, which is already a reversal pattern, but with this, it's basically a stronger. Now it gives us a stronger signal that a reversal is due to happen. Then the market goes back up. All right. Now let's talk about our strong pattern. These are patterns that have very high possibility for a reversal to happen in the trend. First one is called the three white soldiers, and the opposite of it is called three black crows. Okay, so we have a downtrend, then we have three big white candles or bullish candles. It basically is a very strong signal that the trend is changing from from bearish to bullish. So three black crows is the opposite. So we have an uptrend, and we have three black candles, which basically represent that the market is changing from bullish to bearish. Okay, a morning star and an evening star are the 3 day candle pattern. Now notice this. We have a downtrend, okay? We start with a strong bearish candle. Then we have a spinning top. Then we have a bullish candle. And that's what represents a morning star. This is basically the star. It represents the start of a new day, the start of a new trend. That's the like when you try to explain what does it mean, like the name, this is what basically it means. It means that it's the start of a new trend. It's a morning star. Since it's morning, it means it's bullish. The market is going up. So downtrend going down, bullish trend starting up. Evening star is the opposite. Okay, so it's like the dark days on the market. So the market, notice how is having an uptrend. We have the same pattern, but it starts with a bullish candle, then a spinning top or a doji, could be a doji, or then we have a bearish candle, then it means that the market is going down. Now the last pattern in the strong reversal pattern is called a three line strike, okay? And there's two different types of it, bullish and bearish. It's a 4 day chart. It's a 4 day, reversal patterns. So notice here, no one talked about three white soldiers and three black crows, okay? So we're talking about an uptrend, then three bearish candle. Here it's different. So we're talking in a downtrend, and we have three different candles. Here's up, then it starts going down. Here it's already on the way down. Three black candles, then a white big bullish candle. This is a very strong sign that the market is actually changing its direction. Same thing here. Market is going up. We have three bullish candles, then a big bearish candle right here. This usually indicates that the market is going down. And that's basically everything you need to know about reversal pattern. But I do want to mention these patterns. These are called general chart pattern, and you can see them on candlesticks or a bar chart or anything like that. But in candlestick, they're called differently. We have mountain top. It's basically a triple top pattern. So when the market going up, down, up, down, up, down, we have three tops. They are basically near each other. As soon as we break the neckline, which is the line connected that connects every bottom of these, it's usually a big reversal pattern, and it suggests a big change in the trend. The Buddha top is basically head and shoulders. So as you can see, this is the left shoulder, the head, and the right shoulder, and it works the same here. And this one's called three river, which is basically a triple bottom pattern. So thank you all for watching. If you have any question, please ask. Next week, we're gonna have a new video about continuation patterns, and we're gonna explain what are they, how to identify them, and etc. Thank you all for watching. Please hit that like and subscribe button, and see you guys next time.